I want to dig in a little bit about this idea of the two tests that you have to pass in order to qualify for the Section 121 capital gains tax exclusion for the sale of a primary residence. So let's say you've finished your project, you found a great home, you've renovated it, it looks gorgeous, you've lived in it for a while, and you want to put your property on the market, take your profits, and move on to a new project or to a new home that doesn't need a lot of fixing up. So you have to have owned the home for at least 2 out of the past 5 years immediately preceding the date of the sale. That's called ownership tests. So interestingly, the 2 years does not need to be consecutive. It can be cumulative as long as it falls within the 5-year window. For example, hearkening back to that, the person that I was telling you about that started a renovation and then realized mid-renovation that it was just too much to live in the middle of all that mess and then moved out into a rental. If that person eventually then moved back in to the property and did not put the property in the market until they had lived in it a total of 2 years, both the first period and the second period, and those 2 years would have to be within that 5-year window, then they could still qualify for the Section 21 capital gains tax exclusion. Now, that means, for example, because I know we have a lot of real estate investors that are listening to this video podcast, if you have a rental property, it used to be your primary residence, for example, you still may take partial capital gains tax exclusion on the sale of that residence as long as you have put it on the market before the end of that 5-year window in which you have lived in it for at least 2 years. Now, the ownership test is only one half of the equation. The other half is the use test. Right? You have to have used your home as a primary residence for 2 of the past 5 years. And so can't have been a rental property 100% of the time. Right. So, like the ownership test, those 2 years do not have to be consecutive. They just have to be total within the 5-year window. The 2 years of ownership and use can overlap, right? So typically they're going to be the same, and possibly there's situations when they're not always. So if you don't meet the full 2-year requirements because of unforeseen circumstances, like you had a job change, or you had some health issues, or you got deployed to the military or something like that, you may qualify for a partial exclusion, and that's, think of it, it's generally prorated